On social media, I've been seeing a whole lot of complaint about liquidation in the financial market. And I want to put something into perspective. And based on my knowledge in market structure, you see, there is nothing that happened in the financial market, especially the reaction on 8th of October. It was not manipulation. It was not. It's not something strange. It is market structure playing. And the earlier people, a lot of traders change their strategy of trading and try to look at structure of market, the better for each and every one of us. And I want to use this as a litmus test. This structure was posted on TradingView few days ago. Here, RS resistance becomes support on break of structure 1, resistance becomes support on break of structure 2, and on technical, this becomes a sell roof. And this sell roof has been avoided. Now I'm teaching you market structure. And not tomorrow you come and cry that one president liquidate you guys. No, there's no liquidation in the market. The market follows structure. So you are the one who is not following the structure of the market. You are just doing what you like. So now we have this roof, supply roof, and we are looking for a demand floor. And let's be very technical that institutional traders, they wait for market from the supply roof or from the demand floor. These are the two areas. Within the center, they are going to mess your account up. And if you look at the structure of this market, the reason a lot of traders are crying is because they didn't back their risk management by the principles of demand and supply. The principles of demand and supply entails, according to our strategy developed in-house by Shavi FX Hub, is to design the structure of market based on supply and based on demand. But it must create a pathway in a form of a channel, either a bullish or a bearish channel. And if you look at the structure now, you see you have a bullish channel. We have here ROS1, ROS2, no third one. We have here SR1, SR2, SR3, three touches on the bottom, giving you an ascending trend line, two touches at the top, giving you an ascending trend line. Look at where the market is. The market has avoided the roof. The market has avoided the floor. We see where the market is. So whenever you see market in this way, you must guide yourself on the stronger money management. The reason is because the market can do anything. It is completely indecisive. It can buy, it can sell, it can buy, it can sell, it can buy, it can sell, and it can decide to just only buy and decide to just sell without notification. So whatever fundamental data you have in within the line can liquidate you. So if this market, like I already given you an upward arrow, if the market had moved, broken the structure, a broken supply will become a demand floor, and the market moves here, it becomes a definite sell. In this place, you see institutional investors like MicroStrategy, BlackRock, Fidelity. They will place a sell order on that ascending trend line. They will. A lot of traders are not going to see it. They will use algorithm to look at the ratio of those who have forecasted sell on that ascending trend. How many traders know this? So this is where you wait for your sell and you drop down from there. But now you look at it on a technical, the market did not break the supply roof. What does that mean? Now you see the market has, first of all, after creating a new all-time high in July, it came back, it retested another one in August. And on technical, they both formed an ascending trend line, a triple top, touch one, touch two, touch three, on ascending trend line. And if you go back to my video, I was specific about this. We had many perspectives on BTC. And you see what happened. Market respected that structure backed by the tariff war between United States and China. And we had a massive drawdown, which was part of trade. And you look at the rally from here, a rally from here, from the floor, which has been tested 1 to SR1, SR2, and came back here SR3. Final whistle for buy confirmation. The market has left. It's not updated the roof yet, and not updated the floor yet again. Even on that bearish take profit, if you look at it, there was a pattern, a descending trend line playing in an expanding triangle. You have here ROS1, ROS2, ROS3 of the three all-time highs playing on ascending trend line, and you have a descending trend line acting as dynamic support to every buy position you take. Price come here, SR1, SR2, this becomes a giveaway SR3, and that drawdown came back here, SR4. Now you have an expanding triangle. Can you see it? You can see it. So I think it's I mean, there is nothing you can do here, and the market is moving. But I think we are going to have a strong reaction at 119. That's why I've given you this roof. So a push into this roof, I want to change the color to put it into perspective. That when price marches into that structure, you look at it holistically, hoping that we're going to get a reaction from that zone. I'm very optimistic of a price action at this level. Very, very optimistic. Very, very optimistic. So if price comes into that zone, I want to look at the price action on a lower time frame. So on that lower time frame, 3 minutes, 5 minutes, I will look out for bearish coordinates. If I get a strong bearish coordinates and I see it, that could be a confirmation for a bearish continuation. The reason is because the market has already picked liquidity and rejected here. But an invalidation of the strategy will be if we break 1117. A break of 1117, 1119, we retest it as a broken supply will become a demand floor, then ultimately take away the structure. Now, for those who were crying for long, their dream can now be fulfilled. Market can do this. The liquidity it picked from here after liquidating over $19 billion of people's assets, they will now use the money and push the price up. This can be one case scenario. This can be one case scenario, my people. This can be one. Okay, this can be one case scenario. And another one is that price reaches here from 1117, 1118, and you have a massive drop. Price could get there, you see a massive drop. So let me take this out and every time when I see traders crying manipulation, I really feel sorry for a lot of traders. I really feel sorry for them. Your trading strategy will determine your results. I know this sounds a little bit awkward. Your trading strategy will determine the kind of result you will get. The strategy you are using to trade will determine your kind of result. There are a lot of strategies that does not inform you when market is becoming volatile so that you take position. If you understand market structure, what market structure does is that it informs you because what every break of structure means a lot to you. Break of structure means you okay, look at what happened here. Look at what happened here, this buy here. This buy here wasn't a coincidence. If you look very well on daily time frame, from the line chart perspective, you will see we have here RTSR1 after break of structure, price updating this roof. We have created a structure at this level, which can also be mirrored down to a price action from the left. If you look at it from the left, you will see here there's a coordinate here, resistance structure, and we played with a couple of times and we came back, broke the structure, and price came back and formed a support structure that constituted RTSR1, RTSR2, RTSR3, and the last one RTSR4, and that was a buy confirmation, create a new all-time high to go embrace an ascending trend line of the previous two all-time highs and have rejected from that roof and came back, broke that structure. After breaking this structure, ROS1 and another ROS, I will tell you on technical that the price will come here, might not be able to pass here. 117, 118, you see a dead drop. So this was already forecasted and you will see a dead drop into this structure. And I will tell you for free, it might decide to range before breaking that floor. If it breaks that floor, it has no option than to retest here. And if it retests here, you look at it again on a daily time frame. We'll have here as a retest as a candle close, RTSR1, RTSR2 break of structure. We have here as a retest candle and a resistance structure, and we have seen a complete bearish drop to align with the descending trend line SR1, SR2, SR3, and we have seen a push up break of structure ROT SR3. And if price come back there, here is a potential buy floor. So on this level, you could see that a lot of buyers might kick in again. And I think this market should ultimately come down here or should just rest on the ascending trend line. But if it seeks liquidity, it might come down here and return back. And you see the market is reset with an inverted head and shoulder, which is a bullish price action. The market is very much bullish. It's still very much bullish. Is still very much bullish. So this could be another case scenario. And on the contrary, if you see an outright breakout from the structure, that brings you into a bearish season where you look at the BTC buy on 49 level. This is also very much possible. I mean, you can never say never in trading, never say never. And the reason for this is because you have here an ascending structure. We have here as a after break of structure, we have here retest SR1, SR2, SR3, SR4. Technical, this becomes demand floor. So in the future, if you have a projection into that zone, that could be the most admired zone for buy, where I think a lot of institutions like MicroStrategy, BlackRock, Fidelity, Vanguard, and the rest of others might step in and they want to flex their muscle and spend some $1 million on the number one digital asset. So at the moment, stay glued to market structure and let me know your perspective. Come to the comment section. Let me know if you have a divergent view, if you agree with me. If you disagree with me, come to the comment section and let me know your view. Let's ride. See you at the top. Bye bye.